Now, folks, the Bank of England raised interest rates to 3% this week and warned that Britain is set to face its longest recession in a century. The bank initiated the biggest hike in interest rates since Black Wednesday in 1992 and warned the recession will last until at least mid-2024. The news is especially bad for those with standard variable mortgages who could see their repayments jump by more than £1,000 a year. So do we actually need to brace ourselves for 2 years of pretty intense pain? Well, with me now is Richard Blanco, landlord and property expert. Richard, I nearly ennobled you there. I nearly said Lord. Now, Richard, I want to talk to you about the numbers that we're hearing there. The Joseph Rowntree Foundation claiming that mortgage rates could plunge 400,000 people into poverty. Are you assuming that we're going to experience rises which could actually immiserate people?
Well, I mean, I think the report's perhaps a little bit more gloomy than perhaps it needs to be.
Rejoice at that news.
And it's probably, gloomy because it wants to kind of make its point heard. I mean, interest rates are going up already, of course. We're seeing fixes of around 6%. They are starting to fall, though, already. What we got was a kind of extra hike, I would say, of kind of 1% because of that fateful mini-budget on the 23rd of September. The markets are definitely calming now. We're seeing what are called swap rates come down, and they're the rates that lenders use to set their products. So we're starting to see 2- and 5-year fixes closer to 5% now. And the good news is that the Bank of England actually has hinted that it doesn't think rates will need to go up as much as everybody thought. So, we're probably looking at rates peaking next summer. I hope that bank rate would just get to 4%. The markets at the moment think it will get to 4.75%, 5%, but obviously we have to wait and see.
So what would you advise people to do if their fixed rate is coming to an end in the not too distant future? What would your advice be to those homeowners who are saying, well, how long do I fix in for? What will the rate be in a couple of years' time? Those sort of questions. What would your advice be to them?
This is the tricky issue, isn't it? 2 million of us are coming off fixed rates in the next year. And the issue is that we probably got super low rates a couple of years ago, 1.25, 1.45, 1.65, those sorts of rates. I would say if you're imminently going to come off a fixed rate, it may be worth going onto a tracker or a standard variable rate just for a few months until fixed rates actually come down, because we are expecting them to start to come down again after the summer of next year. But do get advice from an FCA-regulated mortgage advisor to look at your own individual circumstances, and also talk to your lender to see what options there are for existing customers, because sometimes they have sort of quite cheap trackers. We are seeing trackers at the moment of about 3.75%. So it might be best sort of hanging out on that tracker for 6 months or so and fixing later.
Can I ask you about how does this look on an international scale? Because you mentioned the mini budget, but correct me if I'm wrong, the United States of America, they're experiencing rate rises as well, aren't they?
It looks like things
and
maybe...
And this just wasn't president, I assume.
Not that I'm aware of, no. That would certainly have been a shock to the American markets if she was. Yes. Yes, well, we actually think that in the US they may hike rates even higher than here. And they're starting to go up as well across the Eurozone. So this is, you're right to point out, actually, Darren, that this is an international phenomena. I think, the markets have been very much calmed in the UK by the sort of double act of Rishi Sunak and Jeremy Hunt. And we await the outcome, of course, of the budgetary announcement on the 17th of November, because the Monetary Policy Committee of the Bank of England was sort of flying blind, really, this week, because they weren't still not quite sure what the government intended to do. So once we get a bit more detail on that, that could help even more. But I noticed that swap rates have fallen since Thursday, so that suggests that the markets are generally calmed by what's going on.
All right. So how long do you imagine this uncertainty is going to go on for then, until we get back to a a new normal, I guess.
Well, the Bank of England dropped this bombshell of the 2-year recession. We were expecting more like sort of 15 months. So it's going to be a shallow recession, though. We're not expecting, a huge drop in GDP. So I've done kind of modelling on my mortgages, and how much they're going to go up and down. I think they're likely to start coming down next autumn. And certainly 2024 is going to be a better year for mortgages than 2023. Remember that the Bank of England doesn't want to cause a deeper recession. So it's obviously going to try and bring rates back down again as soon as it can. So fingers crossed 2024 should be a better year for mortgage payers.
On that cheery and optimistic note, we will end it there. But Richard, thank you very much for your time and contribution.
My pleasure.